Welcome investors. This is a presentation on Aarti Drugs Ltd. This video is brought to you by SmartInvestor. Subscribe to our channel, like and share our videos. Click the bell icon for new video notifications. The information for this video is picked up from Aarti Drugs Ltd. Q3 FY22 presentation given by the company. This is the roadmap of the company since last 20-30 years. In 2020, the turnover crossed 2000 crore, consolidated turnover, and 200 crore formulations turnover. Company has clocked in more than 200 crore profit after tax. Company is the largest producer of nimesulide in the world, largest producer of ketoconazole in the world, largest producer of metronidazole benzonate in the world, largest producer of tinazole and largest producer of fluorochemicals and one of the leading producers of metformin in the world, largest producer of Metronidazole in India. The company has 12 manufacturing facilities. The capacity is 3,975 metric tons per month API capacity, 80 plus finished products, 1,10,330 square feet plant area. More than 1,500 employees work and 37% of the revenue is derived from exports. The company has 50 plus API molecules and presence across 100 countries. The company is present across API, formulations, specialty chemicals, and intermediate segments. In the API, it is the largest producer with 50 plus molecules for antibiotics, anti-protozoal, anti-inflammatory, anti-diabetic, and antifungal, etc. Largest manufacturer of three molecules in the world, one of the largest manufacturer of two molecules in the world, nine manufacturing units, 80% of the revenues come from API. Total installed capacity of 47,701 million tons per annum. The formulations is a diversified area owned subsold by Pinnacle Life Sciences, adopted flexible manufacturing approach. Manufacturing plant at Baddi, Himachal Pradesh is WHO GMP approved. Installed capacity of 3 billion unit tablets and 300 million capsules. The specialty chemicals and intermediaries, two manufacturing units, two more facilities coming up, being backward integrated, supply intermediates of antibiotics, antifungal, anti-inflammatory, and cardiovascular to the API manufacturers, manufacturer of specialty chemicals in benzene and chlorosulphonic chemistry. This is the manufacturing facilities of the company. The particulars are given here. In 2021, it has installed capacity of 47,701, production of 34,751, captive 8,164, and net production is 26,587 metric tons. The company has a wide range of products as shown in this slide. The capacity of multi-purpose plant ranges from kilograms to multi-ton levels. Long-term experience, multi-step synthesis and fractionless at high temperature. Total reaction capacity in excess of 1300 kiloliters, consisting of SS and GL reactors across its units, varying from 0.5 kL to 18 kL. These are the reaction capabilities of the company. The company is focused on R&D with the R&D center at Tarapur and R&D center at Tulpi, Mumbai. Spends more than 4.7 crores on R&D, three technicians, 58 graduates and postgraduates, and one doctorate. Well supported by in-house project management team to ensure timely implementation of new products on commercial scale. Develop 30 APIs, developing new age formulation products for Europe, USA, Australia, Brazil, Canada, and China. Plans to expand R&D capabilities to develop complex semi-solids. Majority of products developed with integrated API providers and end-to-end control. The company has presence in 100 plus countries across 6 continents. North America constitutes 7%, Latin America 18%, Africa contributes 11%, Europe 13%, Asia 51%. The top 10 countries the company exports the products include Brazil, Mexico, Pakistan, Turkey, UAE, Egypt, Bangladesh, Indonesia, Switzerland, and Russia. These are the clients of the company, very big names: Microlabs, Intas, Abbott, Alchem, Cipla, Alembic, Mankind, Lupin, Sanofi, Tarapur Pharma, and Indoco Sun Pharma. The management has experience in the field and deep understanding of pharma sector. API, domestic API consumption is expected to reach US 18.8 billion by FY22. In April 19, constituted high-level task force. Currently, India imports over 60% of its APIs from other countries, and the company is in a good position to capitalize. Largest exporter of formulations in terms of volume, double-digit growth is expected in the next 4 to 5 years. The CRAM segment is very fragmented with more than 1,000 players. CRAMS industry is poised for a 48% CAGR between 15 and 18 and expected to witness a growth of 25% from 18 to 21. The company is also into biosimilars as on August 19. Moving turnover for biosimilar molecules sold in domestic market stood at 1,498 crore. The domestic market is expected to grow and reach US 40 billion by 2030. Highlights of the company: robust domestic demand, government support, innovation and R&D, increased investments, technology and cost advantage. The key drivers of the company is high entry barriers, presence in high quality specialty segment, unique competitive position, poised to overcome industry challenges, diversified product and client mix, robust balance sheet, and capex to drive the next level of growth for Aarti Drugs. Benefits are economies of scale, good purchasing power, long-term relationship with the customers, superior quality, 3+ decades of experience, client diversification, international presence, and less regional dependence. Company's known brand in API space, process improvement and R&D cost leadership, phase-wise capex to mitigate debt trap, greenfield projects on course, high entry-level barriers. The company has 600 crores capex plan. Phase capex will lead to distributed investments. Majority of the capex to be funded through internal accruals and minimal debt. Brownfield expansion and debottlenecking of API facilities. Brownfield expansion at Baddi will lead growth of formulation business. Backward integration will lead to cost synergies. So brownfield capacity expansion, backward integration, debottleneck will lead to asset turn of 2.5x. Revenue addition expected is 1,200 crores plus capital consumption of 300 crores. Will lead to revenue growth, higher margins, and higher ROCE. Growth drivers of the company will include expansion, capex, sustainable growth, long-term value, backward integration, prudent capital allocation. The company plans full ramp-up of existing facility and new capacity at 600 crores capex plan, revenue potential of 4,200 to 4,500 crores with higher margin profile in next 4 5 years. The company's share in ABI product under development, product under pipeline, finished dosages, product under development are given here. The script has been quite negative, given a negative return of 21% in the last 1 year, a loss of 140 rupees. The last 6 months it has gone down by 20%, a loss of 126 rupees. The last 1 month, the script has traded flat and a negative return of 1%. Promoters hold more than 65% in mutual fund, FIIs, public, others hold the balance. Mutual funds have decreased the holding in the last several quarters. FIIs have also decreased their holdings in the last 4 5 quarters. So why should we buy Aarti Drugs? The company is a leading player in API. Company gave a bonus share of 2:1 in 2021. The more the floating stock is putting selling pressure and company is not able to cross 600 rupees, which is a big glass ceiling for the company share price. This share is only for long-term investors who have a long-term view of the market and who have faith in the pharma sector. Skip had a year high of 841 and a year low of 485. Technically weak, trading below 50, 100 and 200 DMAs, getting support around 500 levels and resistance around 600 levels. Long-term investors can buy the share below 500 as an excellent buying opportunity. The expansion plan of 600 crores will yield additional turnover and the profitability. A target price of 800 in 2 years and close to 1500 in 4 to 5 years time frame. Thanks for watching this video. Do let us know in case you want us to cover any shares. Leave the name of the company share in the comment section below.